Today on Your Finance and Economy Today, where we review facts, data, insights, and how it affects you. Over 5 years, Ethereum turned $10,000 into $250,000. Bitcoin turned $10,000 into $90,000. But not every crypto story has a happy ending, and today we break down exactly what the numbers show, who won, and what it means for everyday investors. What if I told you that one of the most common assets ordinary people bought in 2020 turned out to be the best performing investment of the entire decade? Not real estate, not gold, not even the stock market. We are talking about cryptocurrency. But here is the thing. Not all crypto is created equal, and the difference between picking the right coin and the wrong one is the difference between retiring early and barely breaking even. In the next 12 minutes, we are going to cover the raw 5-year return numbers for each major coin, the historical price swings that nearly wiped investors out, and what all of this actually means for your money today. Let us start with the numbers. From January 2020 to June 2025, the crypto market delivered returns that no traditional asset class came close to matching. But the spread between the winners and the losers is staggering. Ethereum led the entire field. If you put $10,000 into Ethereum in January 2020, you would have had roughly $250,000 by June 2025. That is a 2,438% return. In dollar terms, Ethereum went from $130 per coin all the way to $3,300. Bitcoin was the second best performer. Bitcoin returned 803% over those 5 years. A $10,000 Bitcoin investment would have grown to roughly $90,000. Bitcoin went from $7,200 per coin in January 2020 to around $65,000 by mid-2025. Then there is the rest of the altcoin market. According to CoinGecko data, the broader altcoin market outside of Bitcoin and Ethereum averaged roughly 350% returns. That is still massive, but it is 1/7 of what Ethereum delivered. XRP, which many people bought expecting huge gains, returned 127%. Your $10,000 became about $22,700. Litecoin, once called the silver to Bitcoin's gold, returned just 95%. And here is the sobering comparison. The S&P 500 returned 67% in that same 5-year window. Every single one of these crypto assets beat the stock market, but the gap between them is enormous. But to understand where we are, we need to see where we have been. Those 5-year returns look incredible on paper, but living through them was a completely different experience. Let me walk you through what actually happened year by year, because the path matters as much as the destination. January 2020. Bitcoin is trading around $7,200. Ethereum is at $130. Nobody knows what is coming. Then March 2020 hits. COVID crashes every market. Bitcoin falls from $9,000 to below $4,000 in a single month. That is a drop of more than 55% in roughly 30 days. Ethereum falls even harder. If you bought at the January peak and panicked and sold in March, you lost more than half your money in 1 month. But what happened next is the story that changed crypto forever. From May 2020 through November 2021, Bitcoin went on a historic run. It went from $9,000 all the way to $69,000. That is a 766% gain in roughly 18 months. Ethereum did even better, going from $200 to $4,800. Then 2022 arrived, and it nearly destroyed everything. Bitcoin fell from $69,000 to $15,500. That is a drop of 77.5%. Ethereum fell from $4,800 to $880, a crash of 81.7%. The entire crypto market lost over $2 trillion in value. Billions of dollars of ordinary people's savings were wiped out. Then 2023 and 2024 brought the recovery. Bitcoin climbed from $15,000 back to $65,000 by mid-2025. Ethereum recovered to $3,300. The people who held through the crash, the ones who did not sell at the bottom, are the ones who show the 2,438% and 803% returns we cited at the top of this video. So what actually pushed crypto prices to those levels, and what knocked them back down? To understand crypto returns, you have to understand what moves these prices, and it is not the same as what moves stocks or bonds. There are 4 major forces at work. The first is institutional adoption. In January 2021, Tesla announced it bought $1.5 billion in Bitcoin. That single announcement sent Bitcoin's price up 17% in one day. When big institutions buy, retail investors follow. And in 2020 through 2021, institutions came into crypto in a way they never had before. Companies like MicroStrategy loaded up their balance sheets with Bitcoin. The second force is the Bitcoin halving cycle. Every 4 years, the number of new Bitcoins created per day gets cut in half. This is built into the code. Supply goes down. If demand stays the same or goes up, price goes up. There was a halving in May 2020. The price went from $9,000 to $69,000 in the 18 months that followed, a pattern that has repeated every cycle since Bitcoin's launch. The third force is the regulatory environment. When China banned crypto mining in May 2021, Bitcoin dropped 30% in 1 month. When the U.S. Securities and Exchange Commission approved Bitcoin exchange-traded funds in January 2024, Bitcoin surged 45% in the following 3 months. Government policy moves prices fast and hard. The fourth force is retail sentiment, fear and greed. Crypto prices are driven heavily by ordinary investors who chase gains and panic sell during drops. The fear of missing out on a 10 times return sends prices up. The fear of losing everything sends them down. All 4 of these forces combine to create the wild swings we just described. Here is how Washington and regulators have been responding to the crypto boom. Cryptocurrency has gone from a fringe technology to something that Congress, the White House, and the Federal Reserve all have opinions about. And those opinions have had real consequences for prices. For most of 2020 through 2022, the U.S. government had no clear crypto policy. Regulators at the SEC began suing crypto exchanges, arguing that most crypto tokens were unregistered securities. The SEC sued Coinbase, one of the largest U.S. crypto exchanges, in June 2023. It sued Binance the same month. These lawsuits created massive uncertainty. Investors pulled money out. Prices fell. Then the political environment shifted. In 2024, several major candidates for U.S. Senate and House seats ran on explicitly pro-crypto platforms. Bitcoin became a campaign issue for the first time. When the Bitcoin Exchange Traded Fund was approved in January 2024 by the SEC, after years of rejections, it was a turning point. For the first time, ordinary investors could buy Bitcoin exposure through a regular brokerage account, like buying a stock. In the 12 months following ETF approval, over $50 billion flowed into Bitcoin ETFs. That is $50 billion of new demand hitting a market with limited supply. On the international stage, El Salvador made Bitcoin legal tender in 2021, the first country in the world to do so. Several other nations began exploring central bank digital currencies, or CBDCs, as government-backed alternatives to private crypto. The International Monetary Fund, the IMF, pushed back on El Salvador's Bitcoin adoption, saying it created financial stability risks. Regulation remains the single biggest unknown in the crypto market. One major law in either direction can move prices by 30% or more overnight. Now, what does all of this actually mean for you? Here is the honest answer. Crypto is not a replacement for a savings account, a retirement fund, or a steady investment in index funds, but it has become a real part of the financial landscape, and ignoring it completely has a cost too. Let me give you 3 concrete examples of what these returns actually looked like for real people. Example 1. You put $500 into Ethereum every month from January 2020 through December 2021, dollar cost averaging, the same way many people contribute to a 401k. By the end of 2021, your total investment was $12,000. At the peak, that was worth roughly $150,000. If you held through 2022, it dropped to about $22,000. If you held to June 2025, it recovered to around $60,000. $500 a month for 2 years turned into $60,000. Example 2. You put $10,000 into XRP in January 2020. By June 2025, that is $22,700. Not bad, but the S&P 500 would have given you $16,700 in the same period, with a fraction of the volatility. XRP barely outperformed the stock market after 5 years of wild swings. Example 3. You bought $10,000 of XRP at its 2018 all-time high of $3.84. Today it trades near 50 cents. You are down 87%. Still, after 7 years, the lesson from all three examples is the same. Timing matters enormously in crypto. Entry price matters, and diversification across coins matters just as much as picking the right coin. From January 2020 to June 2025, Ethereum returned 2,438%, Bitcoin returned 803%, XRP returned 127%. Every single one of those beat the stock market. But none of them were a smooth ride. If you had bought at the wrong time, held through the 2022 crash, and sold at the bottom, you lost everything the headlines promised. Crypto rewards patience, nerve, and correct timing. It punishes panic and FOMO in equal measure. The data from CoinGecko is clear. The returns are real, but so are the risks. If this breakdown was useful to you, if it helped you understand what actually happened in crypto over these 5 years, hit the like button and subscribe to Your Finance and Economy Today. We do this every week. Facts, data, insights, and how it affects your money. See you next time.